Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world, one report at a time. Today we're diving into Anghami's latest annual report, and let me tell you, it's not exactly a chart topper. Seems they're still trying to find the right mix for profitability. This report covers their performance, risks, and future plans, so let's get started. First off, Anghami, for those who don't know, is like the Spotify of the Middle East and North Africa, or MENA region. They provide music streaming services, and more recently they've expanded into video streaming too, similar to a mini Netflix. So this report basically gives us a deep dive into how they did last year and what their plans are. One important metric, as of the end of last year, they had about 66.9 million ordinary shares outstanding, which is all of the shares available. This number matters because it can affect stock value or the true worth of the company. One of the interesting challenges they highlighted is the rise of AI-generated music. It's a double-edged sword, as they put it. It could devalue licensed content and mess with user trust. So even though AI can make music more accessible, it also opens up concerns about copyright and fair pay for artists. On a related note, protecting their intellectual property is a big deal for Anghami. They admit that they could get sued, which could force them to pay damages or even stop using certain technologies. Now, let's talk about something a little less exciting but really important, which is internal controls. It turns out Anghami has identified some material weaknesses, that is, things that could be bad and could cause the statements to be wrong in their financial reporting. This included not having enough skilled staff, not enough good policies, and IT problems. All this means is that there's a risk that some numbers are not right, and they're working on fixing it. Their access to music is also something to keep an eye on. They rely on big record labels for the content they stream, and if access to that music is limited or delayed, it can really hurt their business. These labels have a great deal of power, and from time to time can cause a headache for Anghami's team. Another area that could impact the investment of current shareholder is a note worth $55 million. If the note is converted to Anghami shares, this could result in dilution that hurts investors. They're also exposed to currency issues, particularly in Egypt and Lebanon. There have been currency drops that have hurt their revenue. While they're trying to manage this risk, it's definitely something that investors should be aware of. They have an exhibit showing they have an insider trading policy. This policy is designed to prevent their own people from using secret non-public information for their own personal gain. This is fairly standard, but it's good to know. Another major event for Anghami was the transaction with OSN Streaming. They're joining forces to create a digital entertainment hub. In this transaction, OSN acquired 55% stake in Anghami. They also acknowledge a risk that some people will try to game the system or hack into their platform, which may cause problems for advertisers, rights holders. Once these fraudulent schemes are discovered, it could undermine the numbers, meaning some key performance indicators may be inaccurate. So Anghami is fighting back against this, but it is something to consider. One other significant risk that they admit to is that OSN Group has substantial control over the company and may prevent other shareholders from making important decisions because they have the power to vote for their needs. They have, in effect, absolute control. Finally, they mentioned they may need more money in the future to grow their business. If they can't get this money on good terms, it could hurt their ability to compete and attract new subscribers. They may seek equity or debt financing, which could significantly hurt the existing investors' value. And the last one, Anghami says it does not expect to be paying cash dividends anytime soon, meaning no short-term cash rewards for investors. It's also worth knowing that because Anghami is based outside the US, they're exempt from some US securities laws. This means less information for shareholders and different rules for the company. First, the most important part, revenue. Total revenue was $78.1 million. Not bad, but that's up from $41 in the prior year. Now for 2024, subscription revenue drove growth by nearly doubling. But revenue from live events was sharply down, so what did that mean? Operating losses have been very high too, at $62 a million, but don't worry, those will probably come down. But keep in mind, the company lost more than it earned in 2024. It seems that to gain an increase in market penetration and innovation, the company is continuing to invest substantially. Keep an eye on currency fluctuations, particularly in Lebanon and Egypt, which could significantly impact revenue and results. Tax, the Egyptian pound has dropped 40%, and this had a significant impact on Anghami. The ability to compete effectively also remains a considerable risk in the streaming market, and a large part of the success of a company is its ability to maintain brand strength and recognition. Let's check the warrant liability. They are valued at about $1 million and will probably not be worth anything at current stock price. A final important note, though not technically in the filing since it's after their balance sheet date, Warner Bros. Discovery is investing in OSN Streaming Limited, one of Anghami's key shareholders. This might mean some changes or new opportunities down the road, but we don't know for sure yet. Now, putting this report into perspective, Anghami is at a crossroads. The OSN Plus transaction has the potential to help generate the company more revenue. However, to date, Anghami's success requires focus on key areas. They need to improve revenue, control costs, and manage risks related to currency and internal controls to ensure the success of long-term business and profitability. As they put it at the end of the document, whether or not the company will succeed is a material uncertainty. Don't forget to like, comment, and subscribe. Until next time, keep decoding.